Did you know you can buy real estate using life insurance? By the end of this video, you're going to learn 3 different techniques we use personally to purchase real estate using life insurance. My name is Darius.
And I'm Carmen. Sit back and relax, ladies and gentlemen, because this is going to be a fun ride. I promise we're going to get into the 3 techniques that we use in order to invest in real estate. But first, we wanted to share how we learned about this in the first place. And basically, for those of you who haven't heard this story from being on the Wealth Nation channel, welcome. Darius and I were avid real estate investors, and we still are, but that was like our profession. And so what we would do is we would raise capital. And so we just happened to have communication with an investor who we knew was an avid investor. And we said, hey, we have this deal. Do you want to, make it work? And he said, yeah, absolutely. We'll make it work. Just give me a few days to get the money. I'm going to pull it from my life insurance policy. And I think we were like, come again? And I think the red flags went up because we weren't familiar with this, right? But just because we weren't familiar with it doesn't mean that it's not legit for you, all you haters out there. So the reason why I say that is because at first, the little knowledge that we knew about life insurance back in the day was like, wait a second, we don't want to tamper with anything you got going on with your family because we don't want that on our conscience. And then the other thing too was, is this legit? Right.
Now, we had a ton of questions to ask, but we wanted to make sure we get the money in the hand first before asking a series of questions. Yeah. And one of the stipulations
to that point is because we wanted to see, was he for real?
Right.
You know what I mean? Like, it's one thing for somebody to tell you that they're going to do something, and then when they produce it, you're like, oh shoot, they were for real about that. So then that's when the question started, like, all right, pull up a seat.
Right. And one of the things that really stood out is the fact that he was different from all our other lenders. He was different. First off, what he wanted to do is he wanted to give us the money for 5 years, and he wanted to charge us a fee if we paid him back before 2 years. And we were like, oh, this is too good to be true.
Yeah, we're like, come again? And then he was like, yeah, and as long as the deal, everything goes well, let's just keep doing it again. And we're like, sure, that's amazing. But what's going on? Because and the reason why Darius said he was different is because, I don't know, for those of you who are familiar with working with
private lenders, meaning
not a bank, a person, sometimes if they're not, what's the word?
If they're not savvy investors, what they like to do is call and check up on their investment often.
and there's nothing wrong with that, but there is this point where people have to understand, like, there's some type of hold strategy where it might be a few months, it might be a year before there's any return. And sometimes people get nervous and they get antsy, like, where's my money? And he didn't call, he didn't write. It was like, whatever. We here are the terms, you'll deliver based off of these terms.
Right. And all of our contracts were for a minimum of a year, but this one was an outlier, which we really liked the setup and something that we wanted to do again.
Yeah, because as investors, it allowed us the freedom to continue flipping deals within that 5-year time frame, and it gave us kind of the breath of fresh air that we needed, that we knew we had plenty of time to play with. So to give you the background story, so long story short, when we heard about how he used the cash from his life insurance policy, then we started asking a million questions and said, okay, how can we do this too?
Right. So that was our introduction into this process of using whole life insurance to fund real estate deals. Prior to our knowledge of life insurance, we were avid real estate investors, which we still are, but we added this caveat, which was whole life insurance cash value to our repertoire.
Yeah. So let's get into the nitty gritty, shall we? Right. So what we're talking about is when you use life insurance to invest in real estate, the title of this video, we are talking about whole life insurance specifically. We're not talking about term. We're not talking about index. We're not talking about universal. We're talking about whole life insurance.
Dividend paying whole life insurance from a participating life insurance company.
Thank you for that correction. Did you? I hope you heard that. Rewind it back if you need it. So the main reason why we use this specific product is for 2 things. When you pay your premium, meaning you pay for the life insurance, you're going to get 2 things typically. The first thing is you get a death benefit, meaning if something were to happen to you, some proceeds go to your family.
That's traditionally what we know of life insurance as being.
The second thing is called living benefits. So the living benefits is basically benefits that you're able to utilize while you are living. A lot of people don't understand understand or know about living benefits because we just know about term insurance and you just have to die. There's no living benefits that you can use your policy today. So the living benefits that we like to take advantage of, there's a lot, but specifically for this video, it's called cash value. And cash value is basically the money that builds from a compound standpoint inside your policy. And this is for your whole life. So you have the ability to utilize this cash, borrow it, and use it towards your discretion. So we use the cash value for investing. We use it for financing our lifestyle, anything under the sun. We basically use it as our own personal line of credit, if you will.
Right. And one of the biggest reasons why we like using cash value life insurance is because of the fact that even when you borrow the money, you still earn interest on the funds. So please tell me, in the chat, if you know of another product in which you can still earn cash even though cash is borrowed is outstanding, please let me know, because what this allows us to do is to not only earn interest from our real estate investment, but we continue to earn interest through our life insurance policy.
Exactly. So those are some things that we want you to know just from a foundational standpoint. So we're talking about whole life insurance, dividend paying whole life insurance specifically, and we're using the cash that grows inside the policy for our investing needs. So the next thing that we want to talk about is basically why would we do this in the first place? For a few different reasons. The cash that grows inside of your policy grows tax-free. Tax-free, ladies and gentlemen.
And the reason why that's the case is because we use after-tax dollars to purchase a life insurance policy. So because of this, first and foremost, is why you always stay in a tax-free environment.
So the growth inside the policy is tax-free, which is amazing. The other thing, too, is when you couple utilizing the cash that's growing inside your policy with the potential growth of a real estate property, that is going to be very, very competitive towards the market earnings that you could earn in the stock market.
Exactly.
So that's another thing that we like. In addition to the growth inside the policy is guaranteed. So that's something that is huge for us, as we always like putting our money in places where we know we got a guarantee. We got a big G going on.
Yeah, exactly.
The next thing is we talk about residual income. For us, residual, passive income, whatever you want to call it, it's very important for us because we want our money making money.
Always.
So in this instance, we have residual income or passive income from two operations. The policy, like we said, is growing by itself compoundedly, and then whatever strategy you decide to invest with real estate can produce some sort of residual or passive income.
Right. And that's really important for us to do it, because if you know, in the previous video we talk about why you shouldn't put your money in the bank. It's because the banks don't have their money in the bank. They're using that money that we store in the bank to purchase other assets. Now, this is a good way for us to basically leverage exactly what the banks are doing in our favor by not putting our money in the bank, but storing our money inside of our life insurance policy and then using the cash value to invest in real estate, for example.
Exactly. And then lastly, this is kind of a nerd fact that you all should know. But depending on the state that you are in, life insurance is protected, meaning in the sense of if someone were to ever try to sue you, they cannot come after your life insurance policies. And that is a huge caveat, which is another reason why we really like using life insurance to park our capital.
Right. And that's especially for business owners.
Yeah.
That's a very, very good idea for business owners.
So let's talk about the next point. Darius, when do you think is a good time for somebody to get started with a policy? Like they're listening to this video now and they're going, ooh, that sounds pretty good. When can I do this?
Well, you can start doing it right now. The idea is to, of course, pay yourself first. We've done a few videos on this and we'll link it here. The very first thing you should be doing is paying yourself first. And then when we talk about paying yourself, we have to think about the storage facility in which we store our funds in order to use it in the future. And I'm not saying the bank should be our reserves, but outside of that, our investments, it should be going into a life insurance policy. At least that's our opinion. That's what we do with our funds.
Mm-hmm. Yeah, and many of you have reached out to us. When should I get started? How much should I get started with? Am I too old? Am I too young? And for us, there's some stipulations, at least how it makes sense for us. So the first thing is, like Darius said, you should always be paying yourself first. And we always recommend that you fund a life insurance policy designed for high cash value with your savings. You use that as like your new savings mechanism, so to speak. So you take your savings and move it over, and you use that to fund your policies, and you continue to allow your savings to fund your policies. So we say, first and foremost, if you are a good steward of paying yourself first, then you should definitely look into this option, because it definitely opens up your world to doing many different things, as opposed to using your savings account to invest. The money goes away, and then you have to build it back up. The second thing I would say is based off of age. It's all just going to depend on your health. That this question comes a lot when we hear like baby boomers, anyone 55 and up, anyone 65 and up, people reach out and say, hey, am I too old? As long as you are in good health, you can totally get a life insurance policy. And even if you have some health issues or preconceived conditions, then what we need to do is look into what your options are for insuring other family members, somebody who you have insurable interests with. And then I would say the third thing is making sure that this is something that you can maintain. So a lot of times people say, what do I start with? It's very important for you to understand that the more you start with, the more you have available. So this isn't something that we would recommend for you starting with less than at least $500 a month, depending on your age. Again, don't hold me to that. But if you're thinking, oh, I want to start with $100, this may not be the option for you.
Right. And we're basing that off the general age group in which people do contact us.
So just want to share that information with you. So if you are interested in getting a policy with high cash value, definitely click on the link below. Our team knows how to set these policies up. This is what we do all day, every day. We would love to serve you at the Wealth Nation.
Now, our question to you is, would you try this technique for your next real estate investment or your investment period?
Yes.
So let us know in the chat.
I would try it. All right. So let's dive into the ways in which we have used our policy to invest in real estate.
Right. So if we go back to our introduction to using life insurance policies, again, we were first and foremost real estate investors, and we were using private money lenders, and came across a lender that used this life insurance policy to lend to us for real estate. After this happened a few times, what we did is we got involved ourselves and started using our own cash value to fund our deals. Now, initially when we got started, we didn't have a ton of money to purchase properties outright. So what we did is we used our initial life insurance policy to do gap funding. And what gap funding allowed us to do is, when a lender has a deal, for example, he's able to go and get a hard money loan for, let's say, 80% of the value of the property. He still needs 20%. So in order for us to do multiple deals, we started working with these investors and providing them with gap funding in the form of 20%.
Yeah.
And this allowed us to make money as our money accumulated inside of our life insurance policy, and the money to accumulate for us personally as far as the cash that we had available to invest in these deals.
Yeah. And again, these are just simple explanations. We can get into the weeds as far as how all this happens. But the very first thing that we can say from our experience, and I like that you said we didn't have a lot of cash to start out with.
No.
We had $5,000 to start out with. Let's talk about that. That was the cash value that we had. And so we were like, all right, can we get involved in real estate? I don't know a house where you can buy it for $5,000, at least especially back in the day. Maybe that is possible. Anything's possible. And so we knew that we still wanted to get involved in real estate. So we just had to figure out where we could fit in the equation. So gap funding was definitely something that we got into. You can also use it to help closing costs for real estate investors. You can give them an advance for the closing costs, help them wrap it up, and they pay you back plus interest. So there's a few different techniques in which that you can do this. So we don't ever want people thinking like, oh, I have to have $300,000 in order for me to become a real estate investor. No, you can actually start small, but you just have to understand where you fit in the equation, like we said.
Right. And again, when we were doing real estate initially, we were in the state of Arizona doing all of our deals. And if you're familiar with the market in different places, you'll know that in Arizona, it can be pretty expensive to buy even what we think to be rundown properties to fix and flip.
Yeah.
So as we got more savvy, we started doing deals in other parts of the country. And one of those places was Birmingham, Alabama. Yeah. Birmingham, Alabama allowed us to buy the property outright and also do the renovations with the amount of cash value that we had.
So Another option. You can buy a house outright if you have the cash. For us, it made sense because it was cheap.
Right.
It was very cheap. But the other thing too is if you can't buy a house outright, you need to know the other option of using it as a down payment. Maybe it might make sense for you to use the cash inside of the policy for a down payment. But we only say that this makes sense if you have like a buy and hold strategy where you know that you're going to be creating cash flow from this opportunity. We don't typically recommend that you use the cash from your policy for a down
your
payment
mortgage.
for your mortgage, for the house that you live in. We want you to create revenue, and that revenue is going to help pay back the cash that you lend from your policy.
Yeah, this is why we recommend real estate investors use this process of using life insurance to invest in real estate.
Yeah, because there's a different mindset, I would say, to that point that you made. There's just a different mindset from an investor to a consumer as far as how they can flip money, how they can use things multiple times to make your money make money.
Right.
And even in addition with the point where we bought a house outright in cash, like he said, we went to a completely different state where we knew that we could do that. The other thing too is
South Carolina, Mississippi, Alabama, Florida was our go-to. After the fact, after we got a little more savvy in Arizona, we moved to the South because properties were a lot more. It was more affordable there.
Yeah. And then also with gap funding too, we recognize, okay, if we grow our money to $100,000 with gap funding, we could get involved in multiple deals in Arizona, for example, as opposed to just throwing it all at one house. So we had to, again, do the numbers, figure out the math, and see what way it made sense for us to make the most money or the biggest bang for our buck. So we talked about gap funding or using it for closing costs advances. We talked about buying a house outright or down payments. And the other way that we've used it is for just lending. So example, we have friends who are investors and they do other projects and they need money, right? So we said, hey, we got some money, and we just lent it to our investor and created a deal out of it where we got a generous return. So we didn't even have to be a part of the deal at all. We were just the lenders.
Yeah, we're the financiers. Yeah.
All right. So the main thing is from this video, we want you to understand two things. And the first thing is you have to understand how to obtain a life insurance policy that's designed for high cash value. Would you agree?
I would agree. Because that's the first thing we had to understand. First thing we had to do is get rid of some of our debt, to be honest, so that we can have cash flow, free cash flow, in order to put into a life insurance policy. Once we got our life insurance policy, we had to build up enough cash value so that we can have some money available to invest in real estate.
And that's actually a good point that you say that, because there's a lot of people who are in debt. You know, more than half the country is in debt. So for going back to the point that we made earlier, for those of you who are like, when can I get started? It may make sense for you to clear out some of that consumer debt so you can free yourself and then look into getting a policy like this that could also help maybe pay off some of the debt.
Right, because one thing we learned is it doesn't solve your financial problems. It only magnifies whatever problems you have. So if you have financial debt, getting a life insurance policy, permanent whole life insurance policy, isn't going to help you. You look at it as another bill when it's absolutely not the case.
Yeah, it's definitely something that you should be looking at as an asset.
Yeah.
So the first thing, like we said, is understanding life insurance and how you can use it, because you can use it for investing. It doesn't even have to be just real estate. It can be cryptocurrency, the stock market, whatever it is that you're into. You can use that to accelerate your wins with investing. And that's I really want to stress that, because so many people go, why in the world would you do this? It doesn't make any sense. You have another step in the process. And the whole point we do this is because it accelerates our investing. And once you understand that concept, it just makes it so much sweeter, because we already know what the returns that our investments are going to bring us. Why not couple that with another return? And then you add those two together and you continue to win across the board. In addition, the policy, like we said, compounds. So that's a sweet advantage on top of everything.
Now, I see in the comments sometimes where they say, well, the money in your life insurance policy doesn't compound. I think it's because we don't understand exactly what compounding is and what needs to happen. In order for your money to compound, you have to earn interest, right? But that money also has to not be moving.
Yeah, it has to sit.
It has to sit. In order for compounding to work, the money has to sit. And the nice thing about using a life insurance policy is even when you borrow the money still continues to earn interest because it's still there. So you get to earn compound interest on your money inside your life insurance policy while you borrow the money and use it to earn more interest in your real estate investment.
Yeah. So now understanding the whole life insurance piece of things, then the next thing is real estate, because a lot of times people get involved in real estate and don't understand the different segments and facets that you can get involved in.
There are so many different ways to get involved with real estate.
Yeah.
So many different ways.
Yeah, you could slice a pizza so many different ways. And the thing is like, don't get caught up with HGTV. It's an amazing entertainment channel, but sometimes it's a little overwhelming because you see the figures on there and you go, I can't get involved in this. But we know so many people who are so scrappy and get involved with a few $1,000s and make crazy returns just because they understand their piece of the pie.
Exactly.
And they flip it and they continue to make money time and time again. So there's just so many different ways that you can get involved. Like we said, you don't have to just buy a house outright or have to just use a down payment. And in a lot of senses, that doesn't really make sense because you have to tie up so much cash in order to have a down payment or pay a house outright. So again, just make sure that you do your research and understand what it is that you can do.
Yeah, exactly.
But I'd say, just to reiterate the benefits that we were saying earlier, just as far as how the money grows tax-free, how the life insurance policy is protected. I mean, it doesn't make sense for us to not use life insurance.
Yeah, it doesn't make sense for us. For you, you may have some amazing way in which you can earn interest in two different places at once.
Yeah, and if you do, like we said, comment below, let us know. We'd love to check it out. But for like we said, to stressing it, for us, this is the way in which we invest, and we love to invest. So we want to make sure that we share it with you, so you understand how you can win as well.
Right, and if you're interested in learning more about how to use life insurance policies to earn passive income, then check out our next video where we give you few different ideas.
And don't forget to own your own lifestyle,
or someone else will.